Good morning, everyone. I'm Matt Dana. I'm the managing general partner of Dana Whiting Law. Matt Dana, Dana Whiting Law, and this is my partner, Trevor Whiting.
Well, that's where the Whiting comes in,
That's right. Don't call us up and say, hey, I want to talk to Dana Whiting.
That's right.
All right. Good to have you here, Trevor. And anytime you see Trevor sitting in this seat, you know we're going to talk tax law.
We're going to get nerdy.
We're going to talk code section.
That's right.
We're going to talk regulation. And if we talk about things that are good enough, Trevor, I know there'll be a little bit of drool that'll reach the table over on your side.
Yeah, I need my handkerchief or something.
All right, so I want to talk about, we call this video Appreciate the Appreciation. And Trevor, you know I'm the old war dog, right? This is my 40th year, my 40th anniversary. I'm kind of nostalgic. I'm looking back, reflecting on my career. And one nice thing about being, a 40-year lawyer, I'm working with Generation 3 on a lot of our clients. Generation 1 died, Generation 2 inherited, and Generation 2's providing for Generation 3. And we talk a lot on our videos about multi-generational trust. We also talk a lot on our videos about red boxes and green boxes. And after you watch this video, make sure you go back and read the article on red box, green box, or watch the video, because I'm talking about green boxes. And Trevor, what's our definition of a green box?
Yeah, we love a green box, and green is good, red is bad, and a green box is a trust that is set up where the assets inside that trust are exempt from estate taxes and they're protected from creditor claims.
Okay.
So we get two primary benefits from those green box trusts.
Now, that doesn't mean Junior doesn't get to live off this trust. Son or daughter can be a beneficiary. Son and daughter can have free access to use that trust, but when they die, no estate tax, right?
That's right, yeah.
And what about when their child inherits and then they die?
We're going to do it, like you said earlier, multi-generational. In Arizona, our law lets us set it up for 500 years now. And when I tell clients that, they kind of chuckle and usually say, oh, I think that's going to be long enough. And
yeah.
But, it can go generation to generation, exempt from estate taxes.
Yeah, and Trevor, we've done a lot of these videos together, and there are people that are really liking the fact that we're talking about these high net worth strategies, because there's not a lot of that out there. You see more of the kind of everyday estate planning. And one thing that's really been exciting for both of us, because we've been together for 15 years, we've grown as our practice has grown. Our clients have grown as our expertise has grown. And we're fortunate enough today that we have clients that have hundreds of millions of dollars in a green box. Is that true?
It's crazy to think about, but it's true.
Hundreds of millions in a green box. Meaning when they die, how much estate tax?
Zero.
If they didn't have the green box, how much estate tax?
Man, tens of millions of dollars in estate tax.
Yeah, 40% of every 100 million. It'd be 40 million for every 100 million in estate taxes. Now, interesting, Trevor, how did this happen where we got hundreds of millions in these green boxes, yet the amount that they could transfer in there initially was limited to a federal exemption? Now, some of these trusts I did when the federal exemption was $1 million, and then they saw the federal exemption go to $5 million, and now we got a federal exemption of $13 million. But hundreds of millions. And a lot of times we talk about in some of our videos, go watch the one where we talk about the squeeze and the freeze and the please. And Trevor, so step number one to get hundreds of millions in these green boxes, tell me what the squeeze is.
Yeah, the first step is we take these assets and we put them into a partnership or an LLC, some sort of entity where we can create non-voting interests that don't have control and would qualify for a discount. So we squeeze, if we put 100 million into an entity like this, we squeeze it and we can tell the IRS, this entity is really only worth 70 million. Yeah. So that's the first thing, we squeeze it, and then we gift a piece of that entity into these trusts.
Using their exemption.
Using that exemption amount.
So Todd and I were meeting with a client yesterday. Dad just died, the estate's 70 million. We were talking about Dad just died, we're going to squeeze 20 million into his $13 million exemption. Mom, we're going to squeeze 20 million into her 13 million exemption. So of that 70 million estate, we got 40 million covered right there. There's step one, all right? Step 2 is we talk about a freeze, and just quickly, what's a freeze, and how does that allow us to get more? And this is where we're going to get into appreciate your appreciation.
That's right. These green boxes, one of the key features of them is they're what we call a grantor trust. And a grantor trust means that we can take that, in that case, $30 million of other assets, and we can sell them to the green box.
We're not giving them.
We're not giving
We're
them.
not using exemption.
We can't use any more.
It's fair market value for fair market value. I'm selling $30 million to the green box in exchange for what?
A promissory note says that the trust promises to pay $30 million back to the seller.
All right, think about that. When that happens, there's no gift involved, because we took $30 million and we swapped it for a $30 million note. The $30 million note is in a red box. It's frozen now. It's not going to go up in value.
That's our freeze.
All right?
Yep.
The green box, what's going to happen to the $30 million we put over there?
Those assets are going to grow. They're going to appreciate, and we're going to appreciate the appreciation.
You're going to appreciate the appreciation.
We are.
Because as we look back, as I look back, you and I look back, these clients that have hundreds of millions, we did these freeze techniques years ago. And we did it at the time when some of these assets were on the verge of exploding. In fact, we represented 3 of the owners of the Phoenix Suns when they were selling, right? And we did some planning before that, and we got low appraisals on the Suns, and then it actually ended up selling for $4.4 billion. There's where you appreciate the appreciation.
Yeah.
Right?
Right.
And so as we look back, to me, as I look back over the years, in the last 40 years, and I see these hundreds of millions in these trusts, you know, we pat ourselves on the back because we locked in exemptions and we did discounts and we did the squeezing and the freezing. But the reality was, the biggest factor of it all was appreciate the appreciation. And the other thing, Trevor, I've been saying this a lot, and this might get me in a little bit of trouble here, but I'm going to say it because I'm a believer in it. We talk about red and green boxes. I talk about going forward, we want to smoke red and we want to grow green. Do you believe that?
I believe you've said that.
Do you smoke red?
We got to get rid of all the red.
You don't smoke red, we burn it.
We burn it.
I'm talking about smoking it. We're lighting it on fire.
We're burning it. We're
red.
taking that red box. We're going to shrink it in value. We're going to let that green box grow and let that green grow.
Yeah, very important. The next thing I want to talk about, Trevor, is something that very little said out there on the internet, and we're going to talk about it here. We're going to call it a swap power. Now, guys, he's going to start drooling here. Swap power, right? All right, Trevor, give me the code section. Where do I create these swap powers?
675C.
There you go. All right. Are you sure it's not 675D?
I'm pretty sure it's 675C.
All right. So a swap power, let me get this straight. I've got assets inside of a green box. I've got assets inside of a red box. Why would I want to, does a swap mean I can take the green box, swap it for red assets, tell me how this swap power works.
Yeah, as long as the assets in the red box and the green box that you're swapping are of the equal value, then it says, 675 says we can take those assets and move them back and forth between red and green.
Without triggering any capital gain.
No capital gains, no income tax issues, no estate tax issues. We'd take 10 million of assets out of red and put it into green, and 10 million of green into red.
I'm going to start drooling here in a
Yeah,
minute.
it's good stuff.
All right, so why would a guy want to swap assets? Okay, and I'm going to answer part of it, and I want you to answer part of it. Here's why I've been thinking a lot about swapping assets. Let's say we put over into the green box some assets that were discounted, and they're going to have a huge run-up. Sell of the Phoenix Suns, they're going to have a huge run-up. Or it was a startup and it has this huge run-up, appreciation inside. It has the run-up inside there, right?
Right.
But we know, and we've talked about before, green boxes don't get a step up in basis when the client dies. So those assets have a zero basis. Where we know on the red side, there's assets that when they die, they will get a step up in basis. So I want to swap those green assets that aren't going to get a step up when my client dies over into his red side, and I want to take some red assets there that have already are they're not going to get a step up anyway, and I'm going to bring them over here. And then when he dies, I'm going to get a step up on those assets over on the red side. So that's where I want to use the swap power to do that.
We talk about that a lot, kind of deathbed, tax planning.
Yeah.
If we know somebody, a grantor that has created this green box and has a red box, that maybe they're going to pass away soon, then we say, hey, let's move assets that have appreciated, have this run up into their red box, so that they get that step up at death.
Yeah. I also like a swap power because I don't have to be 100% correct what to put in the green box from the beginning. 4 or 5 years down the road, I start to see something in the green box isn't performing like I think it's going to perform, but there's something over the red box that's going to have a pretty good run up. I want to get that swap in there.
Yeah, we got lots of use of that swap power, and that goes to that grantor trust point.
Yeah.
Where if we create it as a grantor trust, we can swap these assets, and there's no tax issue.
Now, Trevor, you and I know that this has been on the IRS hit list from the beginning of time.
Right.
I mean, you're talking about a green box that's ignored for income tax purposes. Any transaction between that green box is ignored for income tax purposes, but yet it has validity from estate tax purposes. What a great, can you think of a more powerful tool than that?
It's incredible. It's a powerful tool.
I've always said, and you've seen my article where I've said the family limited partnership was the greatest of all time. But I might have to change here my next, I'm kind of like Tim McGraw, my next 30 years, right?
That's right.
My next 30 years, I might have to start talking about these swap powers, and these green boxes are the most powerful tool known to mankind.
You got to appreciate your appreciation and let that green grow.
Thank you, Trevor.
Yeah.